Everybody, happy Monday. Welcome to the morning show. This is Stock Market TV. Spencer Israel, JC Parets. Strazza will be back with us tomorrow. He is in the middle of a move. Wish him well. Welcome, everyone, to the last day of the first half of the year. We say this every time. It's cliched, but where does the time go? Can you believe it's already July, basically? Crazy how time flies. All right. Enough about the time and the calendar and the passage of it. Let's talk about markets. Let's bring JC on. We'll have Andrew Adams stop by today in a few minutes. He shared with us a few charts. We appreciate that. We'll have Jason Parets pop in. We'll have Glick pop in. And then we'll hop out of here. So shall we dance? Let's dance.
All right, we're back. We're back on the morning show.
We're back. It is here.
How we doing? How we doing on volume? How we doing on video?
Great.
Are we gonna
make it today?
All right, we are back. Back from the beach, heading back to the beach on Wednesday. I'm getting so much beach these days. Look at this tan, bro.
Yeah, you are looking tan. Do I see a little bit of a sunglass tan on you?
Yeah, I was just noticing that myself.
Yeah, I think I do.
It happens to the best of us.
Yeah, it does. It does. So this is one of those weeks. It's a funky week. Obviously, Friday is a holiday, and then Thursday is a half day for the U.S. markets, right? So that kind of makes it basically it's a 3-day week is what that means, right? On Wall Street.
Does it?
On Wall Street, this is going to end up being, I think, I would.
And here's the way I look at it. Here's the way I look at it. The rest of the world doesn't give a shit that we're going to eat too many hot dogs and drink too many beers and set off explosives, right? Like the world doesn't care. In fact, the world probably thinks it's a little ridiculous. If you really want to know the truth. So for us, we're going to celebrate. I'm going down to the beach with a bunch of neighbors. It's going to be so fun. Bunch of families going down. It's going to be great. The rest of the world don't care, right? So things are going to be trading. Futures are going to be trading. Crypto is going to be trading. Stock markets all over the world. Just another week. Just another day in paradise in the rest of the world. So keep that in mind. Enjoy the hot dogs. Enjoy the explosives. But just remember.
Are you imagining like a Eastern Hemisphere counterpart of you? You know how like you get mad at Chinese New Year every year because the market's closed for like a week in China? And
I don't get mad about it. I just want to reiterate that would never happen in a capitalist society. It's communist to just shut down the stock market for weeks at a time.
Is there an Eastern Hemisphere version of JC that's like, oh, these Americans this week, it's so stupid? It's maybe there is. I don't know.
I think the market should close the day after the Super Bowl. If you really want to know the truth. Maybe even St. Patrick's Day. If you really want to go there. Day after Thanksgiving, how is the market open? So those are, like if I had any say in the matter, which I do not, those would be some of the changes that I would make. Day after Super Bowl, national holiday. Veterans Day, the market's open. That's rude.
Rude. Not the bond market.
Bond market's closed. See the bond market. No. Yeah. Stock market's open on Veterans Day. I don't think that's okay. Come on, shut it down. You shut it down for dumber reasons.
Yeah, this is true.
So all
right.
That's all I got. That's all I got, guys. I go to the beach. It gives me some time to think about it. Give it some thought.
Yeah. All right, on this, the last day of Q2, let's talk. Let's save some markets.
All right, ladies and gentlemen, we have the Dow futures this morning up 220 points. That's 0.5%. 44,350 for the Dow. NASDAQ 100 futures leading the way this morning, up 0.5%. That's 113 points to the upside, 22,865. S&P 500 futures up 1/3%. New all-time highs, 62.44, up 20 handles. 30-year bond futures up again, pushing 115. 30-year futures on the bonds up about 1/3%. Crude oil flat this morning at 65.5. Copper down close to 1%, 508. Looking to close the quarter at the highest levels ever. Also looking to close the month at the highest levels ever. Gold up 1/3%, 3,300 even. Silver down 1/3%, 36.25, with the VIX up this morning, back up above 17. Over in funny money, we got Bitcoin down 2/3%, 107,670, 107,670 for the BTC. We got Ethereum 2465, down 1.5%. We got Solana 150 even, down 2% on the day. Total crypto market cap, Mr. Spencer Israel, 3.27 trillion. How do we feel about this morning's futures?
How can you feel anything other than, hey, look at this, huh? Pretty good, all-time highs. What's not to like? That's gotta be the message and the sentiment. I mean, not all-time highs for everything, but even Bitcoin is getting there. It's
Let's start
it's
with
knocking on the door.
Why don't we start with two of the most important stock markets on this here planet of Earth? Slide 2, please, if you will, my good man. And here we are with the S&P 500 and the NASDAQ 100, both closing out the week at the highest levels in the history of this here United States of America. How do we feel about that, Mr. Spencer?
I feel how patriotic. That's what I feel.
Yeah. Shout out America. Shout out. This isn't like victory lap stuff. It's not about that. When you're wrong, there's a lesson to learn. When you're right, there's a lesson to learn, right? It's not about, we got it right, they didn't. It's not about that. It's about taking what the market gives us, learning from it, whether we made money from it or not, and then moving on to the next one, right? A couple of good lessons here. First of all, no, not all bottoms need to be retested. Not all lows. How many people missed this rally? Oh, I'm waiting for the retest. It's always a retest. No, you idiot. It's not always a retest. Steve Strazza in the process of moving to the west coast of Florida as we speak. So he is not with us here today. But if he was, I would be giving him his flowers. Steve Strazza, the first person out there on the internets, the good internets and the bad internets, first one out there saying V bottom, buy them all, let's go. And I didn't disagree with him, but I certainly wasn't pounding the table as aggressively as a one Steve Strazza, chief market strategist of All-Star Charts. Absolutely nailed it. So we just want to give Strazza his flowers. Clip that, Spencer, and put that on the internet so he sees it. JC, giving him props. Doesn't happen every day.
Yeah, I mean, look, it's hard to take a victory lap when the race never ends, and the race will. The market is not going to. It's not going to just stop one day. So the race is never going to end. So it's not about. I guess I guess you could take a short-term victory lap here or there if you have a trade or whatever. But this may not last, but it also may keep going. So there's no point in saying. There's no point in shaking your head and just saying, I don't understand it. They're ignoring all the trade stuff and all the Middle East stuff and then the war and it doesn't make sense. There's no point in doing that. It's just a waste of mental energy because the market doesn't care what you think it should be at. It's not how things work. And
then for those of us who have been through a few cycles,
time.
We know that these are lessons we had to learn the hard way. When I was young and stupid, I used to think that the market cared what I thought. Like I was ignorant like that. Fortunately for us, there are still plenty of people out there who actually believe that the market cares what they think. Couple other things. Sentiment was at historic levels this spring. Individual investors had never been that bearish for that long, ever. You've got portfolio managers, the Barron's Big Money Poll, most bearish ever. In the latest Gallup, 90% of liberals think the stock market is going to fall over the next 6 months. 90% of liberals that voted think the market is going to fall over the next 6 months. I mean, we can go on and on. We're not just picking on portfolio managers, or we're not picking on individual investors, or we're not picking on Democrats. It's not about any one group, and it's not about any one sentiment indicator either. It's about weighing all of the evidence and collectively saying, is my mom calling me about liquidating her 401k because Trump's going to crash the market evidence of fear or greed? Sorry, Ma, you fucked up. Hopefully that you didn't liquidate that 401k. Lesson. And I'm like, my mom's like, oh, where did you see that? Oh, I saw it on Instagram. I'm like, well, in that case, it must be true, right? So, like, be careful where you get your information. Err on the side of data as opposed to news sources. Remember, the media is not there to help you make money. The media is not interested in making money in the market at all, even for themselves. The media is only there to distract people who are trying to make money. Their job is to convince their viewers that they are missing out and they are falling behind if they're not consuming that content, right? That's why it's poison, right? So turn the TV off, burn the newspapers. Don't worry about any of that stuff. Focus on the data, and life becomes a lot easier. I can tell you this from experience as somebody who used to wake up first thing in the morning and turn on the goddamn television like an idiot. I used to do that, and it was horrible. I didn't know it at the time. You only realize it after the fact. So just a few good lessons there, just to remind everybody, whether you made money in this market or not. I would say, especially if you crushed it, all of the things that I'm saying should reiterate, to think about these things in the future. Be like, oh, I remember the last time that, right? A couple things there.
I don't think anybody actually reads physical newspapers, but if you still do,
I use the word newspaper to categorize noisemakers as a society, like people who go to like school to study like journalism. It's like first day of journalism school. It's like, how do we like exaggerate the most and scare the hell out of everybody watching?
That's not true.
That's not true. That's like day one, right? Sensationalism 101, and then you got sensationalism 201, right?
No.
Can we talk about Earth?
It's a lot of grammar stuff. You'd be surprised. All right. Can we do what? Sorry.
Earth. Can we talk about Earth?
Yeah, sure.
So I just want to give a shout out to all the Earthlings out there. If you are an Earthling, shout out to you. Here's the All Country World Index hitting new all-time highs. Here's the Global 100 Index also hitting new all-time highs. Spencer Israel, do you remember when they used to tell us, oh, it's only 5 stocks, JC? It's only 5 stocks. Remember
that? Well, yeah, actually, I was seeing a lot of stuff this weekend about breadth from us and from others. Breadth is expanding. Did you know that? It's not just 5 stocks. I think now, you know what it is, JC? Now it's not that it's only 5 stocks or that it's only 6 stocks. Now the line is it's no longer just 5 or 6 stocks, right? Maybe it was, but it's no longer. That's the new line.
One way that I want to look at breadth, when you look at the percentage of stocks making new highs, it's not that many. The percentage of stocks above their 200-day moving average, it's not as much as you think. What that leads me to believe is just how much all of these stocks have to run to the upside, right? Further evidence that things are probably just getting going. So we'll continue to reevaluate that as the data comes in. If you could throw up slide 5, I think this is a big one. So if you're one of these people that are like, oh, new highs, that means sell everything because what goes up must come down. Like if you're one of these people who think that like physics has a role in the stock market, like if you're one of these people, because they're out there. So if you're one of those, see a therapist, but they're out there. So if you are one of those and you think that new highs are a bad thing, when we have the data and we know new highs are historically a very good thing, I would encourage you to do what I'm going to do, right? And it is acknowledged that we don't know what the market is going to do. Historically, does the weight of the evidence suggest that this more stocks should be going up? This is a bull market. We should take advantage of it. Historically, does all of that data suggest that? Yes. But again, the market doesn't care what we think. So what I'm going to do, I would encourage you to do the same, is to follow this ratio. This is the ratio between the S&P 500 high beta index and the S&P 500 low volatility index, which just closed at new all-time highs last week. Highest weekly close in the history of this ratio. And what this is going to give us is an indication of risk appetite. If high beta stocks, think technology and consumer discretionary, if high beta is outpacing that low volatility, think utilities, think staples, right? That is an environment where money is being put to work. That is an environment historically that investors are being rewarded for owning stocks, and those who are in cash are being penalized for doing so. I remember not too long ago, Mr. Spencer Israel, you can take the chart off. I remember not too long ago being told, well, JC, bro, I can get 4% risk-free, bro. Risk-free. Government bonds, dog. Why would I buy stocks? Risk-free. What could go wrong? I'll tell you what. The biggest risk in risk-free was in missing out in the NASDAQ doubling in your face. Doubling in your face for your fucking 4% yield? Ugh. So, ladies and gentlemen, if something seems too good to be true, it probably is. And all these people who are getting their 4% yield, the NASDAQ doubled in your face, dude. Oof. 4%. Ouch. $7 trillion in money markets, by the way. Close to the all-time high.
You know what, though, JC, the more this goes on, I don't, that money I think is never leaving. I think that
good.
It's gonna keep going up forever. So
Good.
I don't know if that is a reliable gauge to look at, because I don't think that's not like nimble money. That money is staying there.
Good.
I don't know how else do you explain the fact that it keeps on going up, and rates have done nothing but go down for the last 2-3 years. The market's ripped in your face, and the money is not leaving. The cash is not coming off the sidelines. So I just don't think that is. I think we should probably forget about that, because that might as well be money on Mars, as far as I'm concerned.
Good.
Yeah,
I don't feel bad for those people.
I don't think it's a question of people. Look, there's a time and a place. You say that all the time. Maybe they want that money there. I don't know. You know what I mean?
Yeah.
Maybe they're, the
institutions that get paid 2 and 20 love the fact that they're sitting on $4 trillion at 4%. I'm sure they're thrilled about that.
Look, there's a lot of retirees, a lot of boomers out there that are retired, not making money. So they need that buffer.
I'm talking about the institutions. I don't care about your boomers. I'm interested I'm interested in investors who actually move markets, and your boomers aren't moving shit. $4 trillion in institutional.
The institutions manage the money for the boomers, but okay.
All right. And throw up slide 2, because you mentioned interest rates. Right? Is that slide 2 there? Here, hold on. Here, throw up the 10-year yield. You mentioned that interest rates have been going down for 2 years. I wouldn't exactly classify it as going down. I mean, technically you're right. But I would zoom out, and I would say interest rates have really been sideways for the last couple of years. And the market likes that, Spencer, right? So it's not about interest rates going down or interest rates going up. It's more about the rate of change of those interest rates. And a parabolic rise in rates or a catastrophic fall in rates is what the market doesn't like, right? Stock market. This sideways hot mess of a range in rates, back-to-back 20% years in the S&P 500, NASDAQ doubled, stocks all over the world flying, historic returns over the last few years in an environment that rates are sideways. That's probably not a coincidence, Spencer.
Yeah. I guess you could call this like normal, orderly market behavior, right? The market freaks out when rates go crazy in either direction, right?
I'll tell you this. I would tell you this. As normal as this is, I think the lack of volatility is reaching abnormality levels. To be fair,
what did I say? We're the lowest. VIX is the lowest since February. Is that right? Is that what I said?
Well, the VIX is, and then the move index is getting crushed too. right? So the move is the VIX for the bond market, if you will,
March. Yeah.
right?
Late March. Okay.
The ICE Bank of America move index, and we're down at we're down at the lower end of the range from the last couple of years. So bond market volatility is next to nothing. I will say though that there will come a time where the bond market is going to have a heart attack, and it's not always going to be like this. So I think another shout out to Steve Strazza. What does he say? Eat when the eating's good, right? Something like that. The eating's good. We're at an all you can eat buffet. So go ahead.
I think he's
have another helping, Spencer.
He's in get money mode as opposed to keep money mode.
Yeah, that's right.
Yeah,
yep, that's right.
Okay.
Get money mode, not keep money mode. That's right.
That's right. All right, let's bring on Mr. Kenny Glick here.
Kenny Glick in the house.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny Glick in the house. Hello, sir.
What's up? Good morning.
Bull market, baby.
That's right. I got my new bull market indicator. I got it all figured out now. It's a combination of things. Ready? Look outside. Sun's out. Check. Air filling my lungs. Check. Now for the magic part. Go to marketwatch.com. If one of the top 3 articles is about what we should be worried about, bull market's still raging. And here's another one. If there's no nuclear cloud coming our direction, bull market, baby. Also, if you haven't heard, Tom Lee saw his shadow this morning, and we are good for at least 12.5% for the week now. So
wow.
And also, here's the 5th test. If you're really thinking about shorting anything, here, I got this right there for you. And come to my house, and I'll shock your ass. What's up? I don't want to hear it. But, Eddie, there was some selling on Friday. Yeah? Was there? Okay.
Dude, Tom Lee saw his shadow this morning. It's so good. That is so good.
Kenny, can I read you the top 3 headlines on Market Watch right now?
Yeah,
Morgan Stanley Strategist sees room to run. Stock market melt up is the biggest risk facing investors. And watch for these 3 risks in July.
Oh,
so,
okay. Whew.
Yeah.
Whew, you scared me. At least it got to be one of those. One of those.
Yeah, okay.
What I saw yesterday was, what's gonna have to happen to wipe out the entire Wall Street rally, something like that. I don't know, but yeah, it's crazy right now. It really is. But what's crazier is, when I come in every day, I'm out to prove that the market. Generally, my dad's been saying the market never goes down for years. He's pretty much coined the phrase "buy on dips." And, if you're looking for a place to buy on the dip, just to prove it to yourself each morning or each day, take a look at multiple time frame VWAP, my friends. Let me show you a couple of charts. Just let me if I could get these. They're adjusted for a day later now. So, but it's worth watching. It's worth seeing. Here, hold on a second. Ready? All right. Check this out. So the market is so cute when it pulls back like that, right?
Yeah.
It's so cute. But there are levels where it pulls back to, which is not funny because it's so calculated right there. So that was our pullback on Friday. So everyone's like, oh my God, what's happening? We're selling off on a Friday. It's the end of the world. Relax. It's just looking for the most common reverting mean price there is. And what is that, friends? Yes, multiple time frame VWAP. And look at it. So on the sell-off, again, I don't participate in sell-offs anymore. I slap my hand away before I start shorting the cues. I just wait for the bounce. So this bounce right here, friends, we got down to 445 late in the day. We were buying 446s for 75 cents and banging them out at 150 and 250 and almost $3 into the close. It is the greatest market to trade. Now I want to show you something else. A couple of days ago, the day before that, the market's so cute when it tries to sell off. Ooh, look at it. Now, let me show it to you right here on the 3-day, I think it was. Boom. There's that first one. Wait for it. There it is. Oh. So there's the faux show bro, my friends. And what's wonderful about trading with the Qs is that when you get the faux show bro, you know it's going to be a good trade. And let me carefully explain this to you, and then I'm going to skedaddle. The market, what we used to do in 1999, you hear all those epic stories about how everybody was a trader. The pizza guy was a trader. Your mom was a trader. Everybody was a trader, right? because every day was exactly the same. The market would start up slightly gapped up. They'd fade the open, and then we'd rally for basically the entire day. Midday little pullback, and then we'd rally into the close. That's what we witnessed on, that was Thursday. So what we used to do was we'd wait for the dip, the foe and the show, the dip and rip, or the check mark. We had a lot of names for it because it was the same day over and over again. And normally we'd buy the 9:30 high break because you knew that's when we would take off. VWAP is now telling you it's giving you a head start on a trade that's been working my entire life. So VWAP's telling you not only where the pullback will end, but a great time to be buying off that multiple time frame VWAP hold. So you could be buying into this and using that as your out, or, if you want to be a little bit less, aggressive, wait for the VWAP break. That was today. That was the day VWAP, and you buy that and you use the faux show and the prior day VWAP as your stops. So clearly defining your trade, and then look at this beautiful uptrend. And then in the middle of the day, they test the VWAP to the penny. And this is what I say. When I say the market's rigged, it is. And every day, these two blatant days, it proves it. It's rigged to VWAP. It's just running on a computer program. A computer program is, to me, again, speaking to Tom Lee, who says the market never goes down, and he's usually right because he's usually right. The market never goes down. Looking at where we project, and again, people thought we were nuts talking about Oracle a couple of weeks ago. And our projected move, according to the algorithm that we use, was 220. And that was when the stock was breaking 182. And look where the stock is now, 225. So it's a wonder, like Strazza is saying, eat all you can right now and gorge yourself until they kick you out of the restaurant. You go home now. You've been here for an hour. You go home. So just keep eating until they cart your ass out of the restaurant, until they make you leave. That's what I'm saying. So good times, baby. Good times. It's crazy
Right.
bear in a bull market, but this is where we're at.
Kenny, going live at noon today, right? The long and short of it. We're going to review what you just did all morning at the open, after the open, see what you traded. I know you had let's see, what was on, let's tease Kenny's list this morning here. What was on the VWAP watch list?
I'm looking for weird names because it's getting boring just trading the Qs.
Speaking of tease, extra chest hair this morning. I see you, dog.
Oh, all I'm doing is it's cool. It's 80s shirts. I've been cleaning out my closet, getting some cool. I found this one too.
No. You got to give the ladies what they want. You drive them crazy with that chest hair, brother.
Hey now. By the way, I'm getting. You want to hear nerdy? I'm getting another tattoo. I'm getting my old school Enterprise right on my chest, so I can go number one. That's where I'm at. That's right, kids. I'm getting a Star Trek tattoo right on my chest. It's gonna be awesome.
All right. Enjoy that. Kenny, we'll see you at noon, all right?
All right.
What could go wrong?
By the way, SRAD, all-time highs. Come on.
Yeah, man. We're at all-time highs in a lot of things.
Hit the bid. One of the great URLs in finance. Am I wrong?
For sure. Definitely.
Once you got the cease and desist from the NASDAQ. He had to shut down suckmynasdaq.com. That was unfortunate. But recovered well with that hitthebid.com. Recovered well. Yep. Shout out to the NASDAQ. New all-time
haven't seen lifttheoffer.com. Maybe it exists. I haven't bothered to look. So maybe it's red. Let's bring on Andrew Adams, Saut Strategy. He is here. He sent us a few charts. We always appreciate that. And let's see what's on his mind.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Andrew, sir.
Ooh.
Good morning.
Nice
How are you, my
bookshelf
man?
game. Very nice bookshelf game.
Thank you. I'm in the process of selling my house, so I've had to clean it up. It was a huge mess. Like, I had books on books on books, and realtor came in and said, we can't have this. We have to make it a little more presentable. So this is the best I could do.
How far are you going? Are you staying local or are you moving far?
I'm staying local. I'm going 10 minutes further inland. These hurricanes the past few years are around here in Central Florida. I'm in the Tampa area, and the last one scared me because I'm not on the water, but I'm close enough that if the big one ever did hit, my house would be underwater. So I got to get further inland. So
did you grow up around there?
No, I've been here for 20 plus years now, but long enough to basically be a Floridian. But did not grow up with these hurricanes every year hitting our area. So
Congratulations on the national championship, by the way. As much as I hate the Florida Gators, credit where credit is due.
Hey, no one was more surprised than me. That's the most like out of the blue national championship, I think, in the history of sports. So we'll take it. We still have been terrible in football, maybe on the rise, but yeah, we'll take all the ones we can get.
Dude, Miami's home schedule this year, they play Florida at home, FSU at home, and Notre Dame at home in Miami this year, all three. So shout out to season ticket holders down in Miami. That's solid.
Miami scares me, and I'm also a Tennessee Titans fan, so we got Cam Ward now, so hopefully he can produce for us.
All right,
nice. And Restrepo too, right?
Yeah, he brought him along.
Dude, Restrepo, don't sleep on Restrepo. A nice little slot guy. You need those. It's tough,
we'll see.
Man.
Titans are still going to be terrible, but
most likely.
We'll see. Dude, go to ChatGPT and put in Cam Ward's like career in ChatGPT and tell ChatGPT to tell you what his career is going to look like. I think he loses the Super Bowl or the AFC Championship game in year 3, wins the Super Bowl in year 4. Go to ChatGPT and put that in. I'm telling you, it's pretty cool.
I might be the only person in the world who's never used ChatGPT. We could probably talk the whole time about that.
Dude.
My wife is always telling me like, "Oh, just go." I'm like, I have yet to find a reason to use it, but maybe that'll be the first thing I actually test it on.
How often do you use Google?
I guess every day, but it works for me. I've never seen a reason not to use it.
Well, you're using Gemini. Using Google. So you're using Google's AI.
Next time you go to Google something, go use ChatGPT or some equivalent, right? And see if you like it better, because it's more of a dialogue. It's more of a back and forth, right? So it's less question answer and more conversation. Like you can actually engage with it and say, okay, I see your answer. But what about this? But what about that? What about that?
Yeah, Andrew, come on, stop being such a boomer, bro.
It'll just tell you. Enough about that.
I'm a 40-year-old, 80-year-old, basically. So
yeah, that's fine. So are we all. Let's talk charts here. You sent us a chart. Let's pull up the S&P chart. Funds on 7. We'll start there. I mean, what is there to say? We're at all-time highs. What is there to say to that?
Is that bearish normally, Andrew?
No, that is always bullish, and right now there's no reason to not be bullish. I mean, the market is sending clear signals that you cannot fade this at this point. This is sort of a bigger picture look, and I think I even shared the same chart last time I was on last year. I mean, this is the very big picture going back over the plus 100 years. We are right up at the upper channel that we've been in going back to the right before the crash in 29. So I think big picture wise, we have to keep that in perspective. And this upper line is so far back, and even minor adjustments would tweak it a little bit. So it's hard to even come up with a clear level where this crosses right now. But I think it's probably somewhere around 6,300 right now, somewhere around there. So we are starting to butt back up against that. So in the short term, I think we have to defer to the upside. As you said, the most important stock index in the world breaking out to new all-time highs is never a bad thing. But anytime something does break out and then pulls back soon afterward and back into the range, that's never a good thing either. So I think in the short term, that's what we have to be on alert for. If we do start seeing sort of like we did in February, where the S&P broke out and then soon came back down, that was a red flag that sort of got my attention. And once we started seeing more sellers come in after that and the downside started to accelerate, I got out, and that's going to be my playbook going forward. And I've talked about that in my own reports that I put out for subscribers. I probably even talked about it last time, where at this stage in what most people consider the secular bull market that's been going on since 2009, it's been wonderful. You've got to have done some very bad things to have not made money over the past 10 to 15 years. So I think at least now we have to start switching to the mindset of protecting it more so than trying to get more at any cost. But at the same time, I try to be as pragmatic as I can. And I always say I let the market do my thinking for me. So, I mean, right now the market's clearly sending bullish signals. There are red flags. Not everything is breaking out to new all-time highs at the same time. Even Bitcoin is sort of like it did earlier this year, where it topped out in January, and then the S&P broke out in February, and Bitcoin didn't join it. The semiconductors aren't breaking out. So I mean, there are some things that are red flags, but you don't sell red flags. That's just kind of enough to get you on alert to see if the price action will start confirming any sort of downside.
I wanted to go to the next chart. You brought the percentage of stocks above their 50-day moving average. And when you look at some of these others, percentage of stocks above their 200-day and some of these other metrics of breadth, there's still a lot of room to run in some of these. How do you think about the percentage of stocks above moving averages confirming or diverging from the price itself? How do you think about that as divergences, and how do you think about that as more room to run? Like, where's the line there?
Yeah, it is kind of sort of balancing. And I brought up this chart to show that, talking about the kind of the negative divergence or the non-confirmation. So, as the S&P and the NASDAQ 100 break out, we are seeing fewer stocks, at least on the NYSE, fewer stocks are making new or above their 50-day moving average. So, a slight divergence there. But we have also seen this before, where the large caps just keep going, and under the surface you just see fewer stocks participating, but that can continue on for a while. So I think we are close to overbought, just based on, I think this is going back the past 5 years or so. This does typically top out in the 70-80% level. We've definitely gone above that some. And some occasions. So, there is room to run, and, maybe that does take us up to that, 6,300 level in the S&P, where we are testing sort of that longer term, bigger picture line. But, the Russell 2000 is just now getting back to its 200-day moving average, and it's 61.8% Fibonacci retracement of its decline from the past several months. So it definitely has room to run, but at the same time, at least in my experience, you tend to see, rather than the leaders pulling up the laggards, eventually you see the leaders fall to join the laggards. So again, that's what I'm on alert for. But until we actually start seeing evidence in the price action, I'm not going to fight this move. So, as long as we maintain these breakouts in the large cap indices, and maybe we do start to see a little bit of acceleration in other stocks and some rotation. We have seen rotation happen over the past couple of years, where some stocks take a break and others rally up to sort of take the lead in the short term. So if we see that again, that can keep us going. And I will say that that chart that we showed on the previous page, that long-term chart, if we do break above that line, I've always thought, since just things have been so frothy the last, especially the past several years, if we do break above this big red line, that could produce sort of a dot-com bubble type blow off move, where it gets stupid crazy. I think we've hit crazy already, but maybe it gets stupid crazy, where this just it keeps going and makes no sense. So I think we have to be prepared for a surprise on the upside as well. But I trade price action. I am more short term. I'm not an investor. I'm terrible at it. I started my career as trying to be a Buffett disciple, and it wasn't for me. I didn't have the patience. Few people do, to sit there and hold through downturns. And I think I even talked about last time how I entered the business in 2008 basically, and so that was my introduction to the markets, and has always stayed in the back of my mind that I don't want to be the one sitting through a 50% market collapse. And those do happen. Once the secular bull market's in, we tend to get a 50% plus pullback and even the major large cap indexes. So that's not something I want to sit through. So from now on, anytime we do, just like we did earlier this year, anytime we see potential things kind of the bottom falling out, I'm just going to get out and see what happens.
That's so interesting.
Stock. You're NVIDIA with you. We talk about market bellwethers. Is NVIDIA a company in the world?
Yeah, I think so. I think it usurped Apple's position a couple of years ago. I think now NVIDIA, kind of going back, I think it was GM. It used to be, as GM goes, so goes the market. Now I think it's NVIDIA. And talking about, it's not bearish. So NVIDIA, and breaking out to new all-time highs, and it even has more of a identifiable base than even the the S&P and the Nasdaq have. So this is a nice, almost textbook perfect base that's developed over the past couple of years, and the fact that it's breaking out, I think where Nvidia goes here is probably where the broader market's going to go. So if this breakout's for real, and the past couple of years, this has just been a consolidation before another big run up, I think it takes the market with us. I think we have to respect this until we start to see it pulling back. If it starts dropping below 140 or so again, that'll be a huge red flag, I think, for the general market. But right now it looks good, and I think I told my subscribers over the weekend that if you are going to be buying stocks here, I think you stick to the leaders. I think you stick to the Nvidias and the similar stocks, the Microsofts that are at or near new all-time highs, and rather than hoping that the laggards get pulled up along with these types of stocks, you stick with what's working. That's what people are piling into, and I think you have to respect it, and even if it doesn't make sense. And Nvidia is a great company. I was on board very early, but then got out very early. Again, I'm not an investor. If I just held Nvidia for the past 10 years, I probably wouldn't be doing this. I'd be at the beach. But I'm a trader at heart, and so when I see signs like this of a key bellwether stock breaking out, I think you have to respect it until it gives you a reason not to.
JP Morgan also making new all-time highs, Microsoft making new all-time highs. So it's not like one bellwether, but you've got a whole bunch of bellwethers. Yeah,
I sent out just a big list of the stocks to my subscribers, and those were on there. Broadcom, TSM, there's a lot that are leading the way, the kinds of stocks that we want to see leading the way. The banks continue to surprise me, but JP Morgan is not the only one. There's a lot of big banks that are either have already broken out or look close to doing so. So the market's just not giving a lot of reasons to fight this at the moment, and it does always worry me when we're seeing this during the summer. Just I don't trust summer action as much as I would early in the year or late in the year, just because it can be so fluky sometimes, and we may tend to get more fake out moves, and even in years like 2020 and 2009 when we had these big recoveries, even in like the June-July period, we tended to see 8-9% pullbacks in the S&P, and we obviously haven't seen that at this point since April. So at this point, I think dips probably remain rather muted. If this is as bulled up, and if these breakouts in the S&P and stocks like Nvidia are for real, maybe we don't even see 8-9% pullback. But at the moment, I think if we did get that I think we'd have to view that as more of a buying opportunity for now. Because I think the downside probably should be limited. If we are going significantly higher from here, it probably is limited to 5,600, 5,700. I don't see a good reason to go down further than that. And if we do start breaking down below there, that's when, bigger picture, I'd start to get more concerned again.
Can you throw up slide 2? You mentioned, Andrew, the small caps, Russell 2000 running into the 61.8% retracement of the entire move down. NASDAQ, S&P 500 already making new all-time highs. All Country World Index, Global 100 Index, Germany. We can go down the list. A lot of new all-time highs across the board. Russell 2000 nowhere near that. First of all, how much weight do you give this retracement level? We all see it. You also had former support at the beginning of the year there, so big level there for the Russell 2000. Number one. Number two, how much weight do you give small caps in general as a confirmation of a bull market, as general, overall participation in the bull market? How do you think about these things?
I probably give the small caps more attention than they deserve. I always consider, when I talk about the major indices, I always include the Russell in there. People ask me why, because it's been clear for the past several years that this isn't what the big money are really trading. They're focused on the mega caps and the highly liquid stocks that have been dominating for the past several years. I still look at the small caps. Maybe that's old school. I prefer to see the small caps leading, and I will say I haven't looked at the percentage gains recently, but at least as a couple of weeks ago, even though the Russell 2000 was only coming up to its 200-day on a percentage basis from the April low, it was still either outperforming the S&P or was right there with it. So it's not like it's lagging that badly on a percentage basis. It fell a lot more, so it has more space to have to recover. So ideally we would be seeing this breaking out at the same time, but it's very rare that we get the perfect scenario. It doesn't exist. There's always going to be reasons to worry. Like I said, where we are in the bigger picture valuation wise and where the charts are after this incredible run over the past 16 years, I do probably put more focus on the downside and red flags than I should. And people constantly ask me, why am I so bearish? And I was like, I don't want to lose half my capital sitting through a 50% decline. So if I do start to see things go the wrong way, I'm not going to question it. I'm not going to. I think the most dangerous thing that people can do at this point is what most people are doing right now, is just assuming that no matter what happens on the downside, we're just going to go right back up to new all-time highs. And that has been the case.
You think they're assuming that? You think they're assuming that?
I think a lot of people are. I mean, that's the feedback that I constantly get. I hear it from people that, even earlier this year when we were crashing basically and seeing downside moves that we don't typically see. And I was worried. And I know I will be the first to admit, I was worried that we were going to roll back over in the 5,500, 5,800 area. I turned very cautious again around there, just in case that was sort of wave one that we saw earlier this year. And then we bounced back up and we saw something similar on the way back down. So, I turned very cautious, and then the market didn't confirm that. And now I've changed my tune over the past few weeks or so. But again, I'm okay doing that. I'm willing to give up some upside to protect the downside. And like I said, I didn't feel the need to have to sit through a huge recovery, because I did manage to manage the risk on the downside. So, and I did a pretty good job buying the lows. I thought we were definitely due for some sort of bounce in early April, and said so in my reports. But again, I also thought it was a very good chance that we might see a round two come once we got up to 5,500, 5,800 in that heavy resistance area that turned out to not be a heavy resistance area. I thought we would see more issues emerge from that.
This is a really important point, guys. And if you're out there pay attention to what he's saying. I've lived exactly this before. I remember really well in 2016, as a matter of fact. In 2015, I was Mr. Gloom and Doomer. I thought the world was coming to an end. I was convinced that Deutsche Bank was going to zero. This was in 2015. And, we got a massive correction, and that turned out to be right. And then in early 2016, in January, February, you had a key bottom. We had every reason in the world to be buying stocks, no matter how bearish I was the prior year. But I was convinced that we were buying stocks temporarily before the eventual rollover in the spring. Our targets were hit in April and May very quickly, and I was convinced that we were going to roll over. Well, I went on vacation at the end of June, went to Mexico, drank too much tequila, got too much sun, came back to my desk, and started going through charts. I'm like, oh my God, we are not rolling over. We're going. It doesn't matter that I thought that the market was eventually going to roll over again. We were buying stocks despite all that. And then when the evidence suggested that we were not rolling over, we were heading higher, it was quite the opposite. Buy everything. Andrew's basically describing a very similar situation that I had back in 2016. Maybe a little less tequila, maybe a little less sun, right? You don't look like you got that Cuban skin, maybe a little less sun.
No, I'm the worst Floridian. I can't even go outside.
So how's my description?
But it is true.
It's a similar situation, right?
Yeah, and I mean that's my whole philosophy. I mean, I am more of a tactical person, more so than strategic. People want these big, strategic trends that they can jump on and ride for years, and that's just not what I do. I mean, I try, and I have hit on a few. I've done okay on some of those, but I've also gotten a lot of that wrong. But on a more tactical basis, again, I'm trying to protect the downside. I've worked with Jeff Saut for over a decade now, and he's always been my mentor.
How's Jeff doing? He's doing all right?
He's actually had some health issues this year. He's getting up to that age where those things unfortunately happen. He had to take some time off earlier this year, but he's slowly making his way back and writing reports again over the past month. But he's always said that if you protect the downside, the upside takes care of itself. And I take that to heart, and I do protect against the downside. And if this was 2011 or something like that, I'd be a little bit more willing to be aggressive and hold through these downturns. But in 2025, with where valuations are, I'm always having my CFA charter side and my CMT charter side fighting, and like the CFA charter side, doesn't give me great reasons to be an investor at this point. But the CMT technical side, I follow the charts and I let it do my thinking for me, and it time and time again, if I'm temporarily wrong, I try to remedy that as quickly as I can before I give up too much upside. But I also, at this point, I'm more willing to give up upside than I am to sit through downside.
Can you tell us about Bitcoin before we let you run? You've given us a lot of your time. Appreciate you so much, Andrew. Can you just touch on Bitcoin before you hop? Because I know you brought that chart, and man, I don't want to get ahead of myself here because there's still another 10.5 hours until Bitcoin closes for the quarter. But this is looking to be the highest quarterly and highest monthly close in the history of the old blockchain chain.
Yeah, and I'm not like a Bitcoin. I'm not a crypto true believer, but I'm also not a critic of it. I treat it just like any other high risk asset, and I think it's probably the highest risk of the major assets. And so it's kind of telling two different stories on a bigger picture technical basis. I do think we do sort of have this very nice cup and handle type pattern that's developed over the past several years, and we had a very nice retest of that a few months ago, where we hit that support and bounced off like we want. And so the minimum price projection from this big pattern, is, assuming I'm doing my math correctly, is around 130. So I think there technically there is room for it to run here. But at the same time, like I said earlier, the fact that just like earlier this year, it's not making a new all-time high along with the S&P sort of gives me pause, just because I'd rather see Bitcoin leading the way. But at the same time, again, not everything is perfect, and it's also not giving an obvious sell signal either. So assuming we can start breaking out from maybe this little short-term pattern I have delineated by those dotted lines in black, if we break through this, maybe that starts to produce another leg up toward 130. And I tried to hit on Ethereum a few weeks ago. It looked like it was breaking out of a nice little consolidation, and then we had the whole Iran-Israel thing blow up, and I got stopped out. But I'm keeping an eye on it. If we do see a breakout here, I think we could see another leg up.
So 130, and then what's next after that?
No clue. I've told people for years, if it goes to 1 million or if it goes to 0, I will be equally as unsurprised. So, I trade it. It looks good now, and until we start to see some of these recent lows taken out, I think we have to look higher. But I have no long-term price projection on it or anything like that. I think sentiment-wise, it's always frothy in the crypto space, but I have seen some very frothy, and I feel like all the YouTube algorithm stuff is coming back, and people on social media talking about crypto that should not be talking about crypto. Like former bartender that I used to know is now like pitching Bitcoin on social media. So those things always scare me, but at the same time, I just follow price action.
Oh, you ain't seen nothing yet. There's a lot more room to run on the social media frothiness.
Yeah,
I'll tell you that. There's always more room to run.
Can always go up.
Yeah, they can always be more crazy. Just don't respond to any DMs. Rule of thumb in life: don't respond to DMs about crypto or anything, stocks, whatever. But Andrew, I know you said you're moving. Life is kind of crazy for you. We thank you for joining us. I know you've got packing and things to do, so thank you for the time. You were more than generous this morning. Half hour with us, a lot of time.
No, Andrew, thank you so much.
Yeah.
Steve Strazza literally in the process of moving. You got a new neighbor down there. Be careful with that one.
Thanks, guys. Appreciate you having me on again.
All right,
you got it. Adios.
Let's just talk. Yeah, go ahead.
I was going to say Andrew Adams, legend. He's worked with Jeff Saut for many, many years. We wish Jeff all the best for sure. One thing that Jeff taught me probably 13 years ago, probably. He told me, if you are confident that you have done the work and you believe that the market is going to do something, or a stock is going to do something, or a commodity is going to do something, there's nothing wrong with having confidence in the work that you did. And if you're going to make a call. Like, don't hedge yourself. If you think oil's going to 100, say, I think oil's going to 100. You've got a lot, especially in technical analysis. You have like wishy-washy. Well, and then they talk like this. Well, it could do this or it could do that, but I don't know.
Yeah.
Like that's not gonna work.
Isn't it? It's all if-then statements, right? If this, then that,
Dude,
right? No.
Jeff Saut, shout out Jeff Saut. He taught me, if you believe something and you have the confidence because you did the work, don't hedge yourself. Tell it like you think. And that stuck with me. And maybe that's why I am the way I am, or maybe it plays a part of it. I don't know. But I just want to give a shout out to Jeff Saut. And by the way, it's not like I'm like, I'm like cocky or anything like that. You know what I'm confident in? I'm confident in that I look at way more charts and I put in way more work than anybody on the planet, and our team is better than yours. I promise you. So that's why we come out here with confidence.
Speaking of our team, we got Jason Purrs in the house. Let's talk commodities, shall we, Mr. Purrs?
Do it.
Oh wait, Jason, where's my video for you? There we go.
Hey guys,
Purrs.
What's up?
What's up, my man?
Chilling. Brought a chart for you specifically. I don't know if we talked about yet. Yes, for you, because a monthly close, it's coming up close. Not quite there yet. I'm a little premature. We'll see how the day shakes out, but there's an interesting one that could develop by the end of today.
Give it to me.
Slide 16.
Oh boy.
Slide 16.
What is this?
We're getting
That's right.
Oh my God! Come on, copper.
What is
your problem with copper?
I don't know. I thought we were going to start with like gold or oil or something. All right, here we are.
Oh man,
are you not entertained? Spencer Israel?
No.
Spencer, okay. Man, just like no, not copper. It's one of the most important commodities in the world. Is copper.
I believe. It's a doctor, isn't it?
It's the doctor. We call it Dr. Copper for a reason, Spencer, and the reason is that it kind of sniffs out if we're getting global growth, if there's inflation. It's Dr. Copper. It's the most significant thing. Not to mention, stocks usually go up when copper's in an uptrend, especially
Fair point.
So it's very important. But I think today this was one that should be on everybody. Somebody said, "Hey, yep, agreed." But this is one that should be on everybody's list for the end of today. I think it's very significant if this thing can sustain up here. It's just barely above the old close from earlier this year. But I think if we get a nice close up here, that's pretty bullish for copper. Also pretty bullish for global stocks, pretty bullish for stocks in the U.S., pretty bullish for just about everything. So I'm looking at this chart today. I think it's one that should be on everybody's radar.
I'm with you. It was the first chart I looked at this morning. I'm not gonna lie.
I'm sure. I was like, JC probably did it. He's just not gonna post it yet. He's waiting on it.
Nah, I've been cheating, man. I've been feeling a little naughty lately, and I was looking at some quarterly charts last week. I talked about it in our team meeting, and I'm in my old age. I have the right to be a little naughty.
I like it. I mean,
I've heard that.
I think it's a couple things. One, it's put it on your list, and then we'll look at it, check it out, and then you come back later, and when it closes, you get the close. Like, that's all it is. It's telling me a lot, though. It's telling me that either way, copper is probably here to stay at the moment. This trend is probably going to be significant and probably stay pretty stable going forward in the end of the year, which also is telling me another thing, which is global stocks will probably keep moving, and everybody will be confused forever. I mean, they're like Italy up, 35%. I don't understand. Spain up, 42? You have Poland up even more. These things are happening, and copper is also one of the reasons that it's just telling you, look at global stocks. It's happening.
Shout out Poland.
Shout out to Slotty. That's moving too.
Yeah, shout out Zloty. New multi-year highs for the Polish Zloty for those who partake.
And then I brought a couple more, but there's a bunch of stuff to talk about in the commodities complex lately. And I also wanted to ask, if we want to go to slide 13, I wanted to talk to JC a little bit about energy. What are you thinking here with energy? Because like for me, I'm at this point where it's like, it's probably happening at some point. It's going to be rough. There's going to be a lot of pain here and there. There's going to be annoyances. It's energy. It's a normal thing in the energy market. However, I think it's happening. Probably by the end of the year, maybe in the next year. Possibly a good trade to buy leaps on something. Looking at the energy sector. But if I look at this chart, and this is one of my intermarket ratios, it's basically looking at the Dow against crude oil. And when it gets into the danger zone, most of the time, oil's in very low numbers. We're talking oil in single digits. That was 1999. It went under $10 a barrel. Oil, the front month was negative in 2020. Back to the danger zone, even past the danger zone that time. And now when we get here, oil was just below $60, and we were still in the danger zone, which is pretty interesting. But it's kind of telling me that, hey, and it doesn't mean that, hey, stocks are going to go down because oil is going to go up. If you look at that huge downtrend in the Dow against oil, stocks actually were going up during that time. It was just oil went up a lot more, energy went up a lot more, and that's how we position here, looking at relative strength, trying to figure out what's going to be the outperformer. Because if we're performing like the Dow or the S&P 500, we might as well put our money in a retirement fund and walk away. We're trying to outperform that, get better returns for that for us and our clients. So looking all the way over here at the highway to the danger zone, I'm kind of thinking that this is possibly a turning point where energy will either bottom out here, like you always say, JC, if these things are going, if they stop going down, they have to stop going down before they can go up. I think that's about to happen. I think we're seeing that happening at the moment, and I think that energy is probably going to kick up at some point. What are you thinking about the whole energy sector? Mainly oil stocks. I know the natural gas stocks are doing well. I know you got some great trades on that, but what do you think about the energy stocks?
Yeah, for me, it's the stocks that are holding up the best, right? For me, it's less about the commodities themselves and the ones showing the relative strength, and you see that. And just keep in mind that some of the best ones are not American ones, right? So don't be, particularly in commodities in general, right? But that's what I would be looking at. The ones that are holding up the best. Where's the relative strength? That's where we want to be. Like not getting
yes,
like in
especially in that sector,
get cuter, like biotechs and regional banks. But in commodities, I wouldn't get cute.
Yeah, it's you got certain commodities that are doing great. You've got copper, you got gold, you got silver. Then oil, like it's gonna always shake you out. And not to mention this was something Steve and I talked about when we did the commodity report a couple weeks back. But when we were talking about just oil and that breakout, the false breakdown signal that we got, I kept talking about the fact that I like it, but at the same time, I hate news-related breakouts. Something going all the way back to the original Market Wizards. Bruce Kovner talked about it, which is, he's talking about a trade in the U.S. Dollar pair, the Canadian dollar pair, and, it breaks out one direction. And, he had a fundamental thesis both ways. And they said, which way did you go? And he said, where the breakout went. And, they said, why? He said, well, one, there was no news on it. When there's no news and the breakout happens, that's usually the best one. For people who are trading today, think about gold. Gold 2024 starts to break out. Nobody cares. Nobody's talking about it. Massive move. Doesn't even look back, but nobody cared. And then you got oil, and it's a big spike that happened, and there was a bunch of news around it, but it didn't break all the way back down. So to me, I'm not saying like, hey, this is it for oil. I'm just saying like I didn't like that setup. But now, looking forward, like I think if we can sustain up here, it can stay above those levels. I think oil could move higher, but once again, like JC said, it needs to stop going down. That to me is everything. But if you look at gasoline, you look at heating oil, all these things are holding up really well. So I do think that complex is going to move at some point. It's just, for me, oil's got to get above 80 to get really bullish on it.
Yeah, that's probably about right. I'm not going to argue with that. That's probably all right. And with gold doing what it's doing, copper doing what it's doing, oil should be next, but we got to see it.
I'd be surprised. I would be surprised. And then slide 15. So to Spencer's point, we'll get back to gold. Like this is important. Let's get back to gold. And so, I know everybody. I usually bring a couple of gold charts every week. I know everybody's here to kind of see what I'm thinking about gold at the moment. And really, when we look at gold, I'm still thinking like we're pretty early in the cycle. I know a lot of people are going to go, well, this looks a little extended. Gold moved a lot. I do think that most of the time when we see this type of a move in gold and we start to have the best quarters, the best years, the best moves in gold, and the best now junior gold miners were up 60% the other week. When we start to see moves like that, that's usually a sustainable trend, and it's telling you that the risk on in the sector is moving into these other areas. So meaning when we see GXJ leading the way, that's telling me that there's a lot of risk on in the sector. Money's trying to find things that are going to outperform gold now. That wasn't happening for a long time, and a lot of people would come to Sam and I and be like, oh man, you guys are crazy. Central banks aren't buying gold miners. Central banks aren't buying silver. And they would just do this over and over again. And the thing is, the cycles work the same in almost every sector every single time. So you have the underlying commodity, gold, the safe haven, the number one. That starts to move. It really takes off. And the next thing you know, you start to see the majors. Like a couple majors moved. I think AEM was the first one to break out to new highs. So AEM starts to move. And then we get silver starts to bottom out and starts to move higher. And Spencer, if we can go to slide 14. And then we get silver. And then we get the whole gold mining sector. Then we get junior gold miners. Now we're seeing platinum. Platinum was leading for the year. It was up 50% and just started moving. I mean, probably one of the best quarters for platinum ever. So, I mean, I think there's a lot of room to run here. I think silver has a lot of room to run. I don't usually like to use the vertical lines to hit all these things, but it just shows it a lot cleaner. And so if you're looking at this, you're seeing these bottom out. So the top is the silver to gold ratio. And when we see silver leading the way against gold, that's telling us something. That's telling us there's risk on in the sector. And usually when that happens, you see silver start to outperform. Every single time that happens, you see this big move up in silver. I think silver is probably headed up to 50. There's not a ton of resistance up here. Like everybody keeps talking about the resistance and the old highs and all this stuff. It's like that old high happened so quickly, and JC and me both saw that happen. It was very quick. It was very violent, and a lot of people got hurt in that. So once again, we're kind of up there heading towards those old highs. I think we can get back to 40. I think we can get back to 50. I don't see any reason why we don't hit those numbers by, maybe August, but possibly year end. And the reason why I say August, for people who haven't traded gold, silver for a long time, if you look at, basically seasonality, look at the seasonality of gold and just go back and look at it. You'll see these big spike tops tend to happen around August a lot of the time. It's the last kind of gas big move. So I do think that we're probably good here for gold and silver to keep moving. And I do think probably August is a time where we'll probably see it take off a lot to the upside. And that might be when it kind of starts to stall out. But either way, like ride the trend. I think it's much simpler to ride the trend here and then stop and stop going, hey, gold's up a lot, I got to short this thing. Silver has been up a lot, I got to short this. Don't bet against uptrends like that. The positioning doesn't look terrible for gold. Silver, the positioning is getting a little bit frothy at the moment. So, but at the same time, like I don't see any reasons to look at it and go, that's the end of this cycle for silver or gold.
Okay. Guys, the link was up on the screen for like 10 minutes. If you want Jason's research, get it at the Gold Rush. Members are going to get their weekly video today with Jason and Sam. So, Jason, good stuff as always, man. And keep on keeping on.
Thanks for having me on, guys.
Thank you, sir.
Let's do a quick recess, JC, shall we? All right.
Yep.
What do we got?
I just got to tell you, the discussion. Are you ready for this? Ready for this? So the Greeks the Greeks and the Mediterranean in general, but particularly the Greeks, they have this thing called Slovaki, right? Which is basically just like a skewer of like chicken or lamb generally, right? Is what they do with the Slovaki with like vegetables. Fantastic, right? Shout out to the Mediterranean Sea. Shout out to the Greeks. Shout out to the whole area of the world. You guys do a fantastic job with your cuisine, and I love you for it. This new restaurant in Easton, Pennsylvania called Melly. Shout out Melly. It just replaced an old shitty French restaurant that used to be there. So that place sucked. So hasta luego. So this new place called Melly. They do the Slovaki. You should go. Take your wife. You're not that far. They do the Slovaki. Get this, with Wagyu beef. So I had a Wagyu beef Slovaki.
I don't know.
My head exploded.
I don't know if I want that. I need the Wagyu in a very specific quantity, right? And way. I don't know if I want too much Wagyu. You know what I mean? It's
No, you're good. Don't worry about it. You're good.
Okay.
Here's what I will say. Here's what I will say. If you like onions with your skewers, I would encourage you to ask for extra onions, because as great as the Wagyu Slovaki is, like, dude, so good. So good. It could use some more onions, in my opinion, my humble opinion. So that's the one thing I would say. Ask for some extra onions on the side. Woo! Shout out, Melly. Shout out.
I want to give a shout out to HBO original films. I'm talking about the movies that are almost like made for TV, that are like made by HBO. They do these like all the time, and they're most of them, it seems like, are based on a true story, which gives it like an automatic 30% premium in my mind, because I love that stuff. I watched 2 HBO original movies this weekend, and they're not well known or anything, but they almost always have like amazing casts, and I love the true story aspect of it, and they're almost always good. So if you see like an HBO original movie, it's almost always good. And they're just these random small movies with like 5 people that you've heard of in it, and these aren't like big box office things, but they're almost always high quality, and they're awesome. So shout out to HBO original movies. I watched Something the Lord Made, and I watched The Normal Heart over the weekend, and just a couple of random movies. But HBO, they do good work on the movie front. So shout out to HBO and your movies, because I think I've had like a 80% hit rate on those things. I've watched probably a dozen of them over the years, and they're almost all good. So that's what I got. Okay, we're done. Let's get out of here. Chart Request Live, 1 o'clock. The long and short of it with Kenny Glick at noon. We'll see you guys for both those shows. Email your requests for CRL questions at stockmarketmedia.com. We'll be back tomorrow morning with the first day of Q3. Who's excited?
And it is souvlaki. It's souvlaki, not Slovaki. So apologize. Cubans don't know anything about Greeks.
That's okay. All right. Thanks for watching. You go eat some souvlaki. Okay. All good.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah. Hit the ground, then it go off. Yeah.